Be looking, of course, at the different type of trends. So there are three main types. Some of us may already know this, but of course I'll do this video anyway. So we've got primary, we've got secondary, and we've got tertiary. So tertiary. So primary trend is basically just a high time frame trend. So like the weeklies sort of, moves. The secondary tends to be, the dailies. There is no specifics as to what time frame, but you can kind of gauge, which I'll show you some live examples as well. And then, tertiaries is like the trend within the secondary trend. So of course that would be good for secondary, sorry. That would be good for your, the intraday sort of traders, the ones that want to get in and out within a day, basically. So firstly, let's just have let me just reduce this. First, let's just have a look at what a primary trend is. So like I said, just the high time frame trade looking like the weekly. So if I just move this down just so I can get a bit of space. A primary trend, so let's just do a downtrend, for example. So a primary trend will just be that higher time frame sort of moves. So if you look on like the weeklies, you can also gauge, to be fair, the primary trend on a daily chart, but it's just a little bit easier just to do it on a weekly chart. So if I just remove this up, so yeah, primary trend is just that long-term, weekly sort of moves. Secondary trend is literally just the sort of pullbacks within the primary. So of course, if you're going from an uptrend, the pullbacks would just be this going down, right? But of course, in this example, we're going from a downtrend. So a primary trend is just basically the pullback. So that would be like a daily sort of pullback. And we're talking about like a really long time, quite a few weeks of pullbacks, maybe even a couple of months. Just depends on how extended that leg higher is. And of course, what drives this and what drives this will depend on fundamentals. So that's why we couple both together, because we understand that if we understand that we want to be short because of the primary trend is pointing down, and of course the fundamentals support that, then any sort of secondary trend that moves higher, for example, if you look at the US dollar at the moment, or even like euro dollar, that we'd understand that we're in a secondary type of trend, but we understand eventually we do want to be getting into that primary trend, and then this is when we'll be holding for a long period of time. And then tertiary. So tertiary is literally just the pullback or any sort of moves within the secondary trend. So of course this sort of move lower would just be, well, that's obviously meant to be moves higher, pullbacks, and then this move just be pulling up, and then eventually it will go down to a downtrend. And this is why if you want to be sort of a fundamental trader, you don't really want to be looking on those lower time frames, just because you get your vision's basically clouded, and then you tend to take a lot more losses than you would initially like. So essentially that's what it is. A primary trend is just that large time frame weekly. You could also gauge it on the daily. The secondary trend is just the pullback within the sort of the primary trend, and then the tertiary is just that lower time frame, hourly sort of 30-minute sort of moves there. And then that just basically, if you then zoom out, you'd say, okay, then all of this was just pullbacks within the sort of main sort of secondary trend there. So it's all well and good looking at it on a line chart. It's it's different to looking at it then on a live chart. So if we just use euro dollar as this example here, just since we're on here already. So like we said, different type of trends. The primary is the higher time frame. I'll also show you how to sort of gauge it on the daily as well. Secondary tends to be like that sort of daily sort of moves, and then the tertiary or the daily sort of time frame, moves on the chart. Tertiary is just the trend within the secondary trend. So that would be like your hourly, your 30-minute sort of moves. So if I just move this up. So let's look at euro dollar as of right now. And then we can have a little gauge as to where we are. So here's a kind of prime example. So during all of this period here, so if we go on the weekly, so gauge the weekly first. I mean, you can see at this stage here, right, that this is the primary trend at the moment. So if I use an arrow, just so it's a bit easier, primary, pullback, and then push down. Technically, as we know, that isn't a pullback because that would just be a sort of complex sort of move there. And obviously this would have broken the low, which suggests, that long time frame move is that lower low, right? So we understand, of course, at the time of recording it is obviously April 23. And we understand now we've switched from a big downtrend to a big uptrend. Of course, you can go back and watch that breaker structure video and you see that we have broken a lot of structure here, which would have been driven by that switch in fundamentals, of course. So this is essentially the kind of primary trend. I'll show you how to kind of gauge it. Just zoom out. You can see clearly that it is basically just trending down. It's just a bit easier just to look at it on the weekly, but there is no right or wrong answer. Daily. So we'll look at this as a daily example. So primary trend. So what do you think the secondary trend is within this? So all of this sort of moves here. So now the primary trend, if I just remove this, just so it's a bit easier to look at, I'll remove that as well. So what do you think the primary or the secondary trend is? Sorry, here, which is this one here. Just the pullbacks within the secondary. So if I zoom out on the weekly, you see how it kind of looks like that graph that I drew out earlier. So this is just the kind of pullback, or if you were looking to get into those intraday trades, you can look at the secondaries, but mainly you don't want to be looking at the tertiaries. So the tertiary trends, or basically the trend within that sort of secondary trend here, is a prime example here. So if you understand, okay, well, we've hit some sort of area of supply there, we're going to be moving down as a sort of miniature pullback within the secondary, then you could just gauge that, okay, well, this then is the sort of moves there. And of course, then we understood that maybe euro dollar had to trade a little bit higher. Maybe there was some further fundamentals to suggest it. But if you just zoom out then, just so you get a bit of a better gauge, well, something would have driven it from all the way down here to all the way up here, right? And of course, this is April 2020 or 2020, all the way up to January 2021. So there has to be a reason why it drove there. And of course, that's when you look into your sort of data and what the Fed and the ECB is doing in this example here. Similar to this one down here, a tertiary trend within this. So if I go on the weekly, tertiary trend within would have been all within these sort of miniature sort of moves here. So if we then try and go down to the 3, I'm just doing the 2 hours or 1 hour just because it's a bit easier to load the data, as you can see. So the tertiary trends would be all within this sort of moves here. So these miniature sort of moves, if you will, these miniature moves here that you could probably get into as a sort of intraday trader. Of course, if you've got a really lower time frame, you can see that a bit better. All of this sort of miniature moves, this sort of, the trends within the sort of trends, if you will. And it's always important just to look on the higher time frame if you want to, of course, gauge where the overall sentiment is going. If we look at it more from a real-time example here, of course, there would have been reasons why we pushed from down here all the way up here, right? There has to be a reason. The chart just doesn't do it because it wants to. There has to be a reason. So of course, that's when, as I said, you need to look into your sort of fundamental data just to gauge it. But then we broke through all of the structure here. So like I said, you can watch back that breaker structure sort of video or the structure there. So clearly it's then pushing higher again. So now how do we gauge it in terms of euro dollar in regards to, of course, the trend and the type of trend we are in? So like we know, jump to the weekly, zoom out. What does it do? It's pointing down, right? There, as we know, there would have been fundamental reasons as to why we pushed all the way, down from 139, 140-ish, all the way down into that 106, 107 region, then pulled back. And then, like we know, that would have just been a complex pullback to just drive lower again. But like we know, as of right now, where are we? So remember how that graph looked. We drove down, and then drove up. And if let's say, for example, I don't know, 2024, 2025, 2026, we then eventually drive lower again because of that primary trend. Like we know, there's always a risk of it pushing higher again, but because we just follow the fundamentals if it deems appropriate. But as of right now, yeah, we are driving higher on euro dollar in that secondary trend now. So basically just the pullback within the primary trend. So like here, we've seen the same thing here. We saw the same thing here. etc. But as of right now, we are starting to see that same thing again. So how do we gauge where we are in regards to current time? So like I said, we are in that primary, secondary trend, sorry, driving higher again. Where are we in regards to current time? So like we know, any sort of moves lower like this would have just been the tertiary trend, because we're fundamentally long right now. This could have been the start of that primary trend though, but we understand that it's unlikely it is going to drive lower that from a fundamental perspective. So I would have just deemed this as a miniature tertiary trend pullback into this sort of region that we've marked out there. We are starting to drive a bit higher again. So now we're just in that secondary trend at the moment, driving ever so slightly higher. So now we just think about like that, like a magnet, and I'll speak about that in just a moment on GU. But 112 is a magnet. 110 is also a magnet if it would have pulled back, broke all this structure here. And now we're just driving into a next region. So 110 and then another magnet up here. And there's some order blocks there as well. Another magnet up there, another magnet up there. Maybe eventually, like I said, it might drive there into a region, I don't know, 115, 120, whatever. It depends on the fundamental, and then we drive lower again. It just depends on the data, of course. But right now, yeah, we are in that primary trend. So now we just think on the high time frame, where is the next? Where is it magnet? Where is it pulling towards? Sorry. So yeah, that is where we are in regards to euro dollar at the moment. Just remember this chart here, which is always important. So of course you can screenshot that if you wish, but drawing tool. So the primary trend, of course, is all the way down. The secondary trend, so that, and then it eventually pushes down again. The secondary trend is just the sort of pullback within the sort of main primary trend there. But of course, all of this primary trend here would be due to sort of a fundamental reason. And then, of course, if you want to go into those sort of intraday swings or trades, you're more than welcome to do that. But then you have to think at some point it's going to bottom out. So something like that is going to bottom out. Something like this is going to bottom out. And then that's when you think, okay, well, for example, right, if let's say I was trading the tertiary trends, which I don't really do that, but let's say I was in this example, what would I do? So I'll do, okay, well, I understand, well, this is just a pullback. So we're pulling back now. I don't know, something may have happened in the euro. Let's say we're massively fundamentally short the euro, let's say. And then we've seen some push higher in the euro. Maybe something's happened in the ECB or something's happened in the US. That's just the market's not really like. So, of course, the euro strengthens on the back of that. But then we think, okay, great. Well, we understand now it's just going to be a secondary trend. First then, or lastly, sorry. Then what I do is, okay, well, let's say, I don't know, I sold here. And then I think, well, there's going to be some sort of demand. There's some sort of, order block there, if you will, like a daily or like a 4-hour order block. And I think, okay, well, I'm only going to be selling down to about here because we understand that it's going to probably likely, or, you never know for 100% sure, but it's likely that there is going to be another leg, another sort of secondary leg higher because maybe there's a sort of order block up here that we're trying to just aim for. So now we think, oh, well, all of this is just going to drive higher. I mean, again, like I said, I don't really look into this sort of tertiary trends there. It's just not my type of thing. But nevertheless, let's say you then mark up the higher time frame order block. So we're getting up there. Does it seem likely that we will get there? Well, it would only seem likely if there is a fundamental reason for that. So similar to how this is if I get up GBPUSD, that might be a good example. So GBPUSD, so this is a perfect example actually. What's the primary trend here? Well, we can all see it's clearly driving lower. That's the primary trend. If you go on the line chart, it's probably a bit easier just to figure out where the main legs are. As you can see, that leg drove all the way down here. It then pulled back up to here. Maybe there was a sort of supply area up here that it was trying to aim for. Of course, it would have trended up from April 09 all the way up to May 14th. So there would have had to have been a reason. It's not a technical reason there. So there would have had to be a reason. Remember, use your technicals as a way of just getting into a trade, not to gauge where a trend is going to go. This is just to help you just to look at a chart a little bit easier. And then we go down to the daily. So we'll use the line charts just as a sort of example here. So what's the secondary trend? Well, here is a perfect example where we saw a bit of a pullback. So now all of this is the secondary trend. Maybe again, there was like a sort of support, a resistance there, or sort of a supply candle that you just would have pushed into, for example. And then what's the tertiary trend? So what's the trend within the secondary trend? So now all of this, all of these sort of moves here as a sort of intraday trader you could have got into just to push into, but then we understand at some point, like in this example here, it drove higher. So maybe then there was some sort of demand candle there, or sort of support, of course, whichever sort of style of trading you like to look at. And then we understand, well, at some point, this secondary trend is going to turn into the primary trend at some point, right? There has to be a reason to do that. So we trended up from here, from Jan 17 all the way up to April 18. So that's a long time, but maybe there's something happened in the UK that was really positive in the near term. Maybe something bad happened in the US dollar, or maybe both happened at the same time where it just exacerbated that move higher, which, I mean, this is a fairly large move to the upside. Of course, doing this was just the Brexit, so of course it's probably just, you know, profit take and reposition it anyway. But if you looked at the fundamentals, you know, towards this sort of region here, then you think, well, there's a demand, there's a supply candle here. You know, we're starting to see a little bit of switch around. I don't know, maybe the UK is starting to show bad signs of growth again. Maybe there's political pressure there. Then we think, well, the primary trend is down, so this secondary trend is going to exhaust at some point. Same with the primary trend. The primary trend is going to exhaust at some point. Maybe one day we might do this, and then the primary trend pushes to the upside. Then we do that, and then we do that. You know, there has to be that long-term sort of move to the upside. So if we look at it again from a more up-to-date version here, so what was the primary, or what would you class this as? So remember the high time frame. Like, to look at the weekly, it's just a bit easier. We'll use the line chart as just a sort of gauge here. So that's the secondary trend, right? Because what is it? Just a pullback within that sort of, you know, that secondary, or it's the secondary trend is obviously the pullback of the primary. So then we think, okay, great. That's all I need to know now. Let me just go on the candles now, just so we can have a little bit of a better gauge here. So it's trending up, trending up, trending up. So let's say we saw it all the way back from here, for example. So then we think, okay, well, if I zoom out, we can have a bit of a better gauge. Well, fundamentally, I want to be short this because, I don't know, maybe the UK was starting to show some signs. Of course, around this region here is when we start to see a really hawkish Fed. The UK was in a really, really bad rut. And then, you know, how we just viewed this is just a large time frame pullback. So notice how then it pushed into this region up here. So we think, okay, well, it's pushing up for this reason. You know, at that time, you know, there was a bit of China, US sort of tension there. Obviously, that just weakens the dollar in that sort of environment at that given stage anyway. There's specifics for that. Then we think, okay, well, we're pushing into this, but we fundamentally want to be short because we start to see a switch around in fundamentals roughly at this region. If you didn't get in here, that's fine. Maybe at this stage here, the timing wasn't right. Maybe it was still pointing to buying GU, so I wouldn't have gone itself. So then what you do then is just reevaluate. So if I just fast forward, cool. So then we'll do, well, just wait. So we haven't broken any sort of higher time frame, you know, that major structure here. We haven't broken any structure here yet. We haven't broken it yet. We haven't broken it yet. We haven't broken it. Now we have. So now we've broken that major sort of structure there, that daily structure. So now the timing seems roughly right. So remember, this is the primary trend. This is just the secondary trend, sort of secondary move higher. Of course, as a trader, you're going to be more concerned about that sort of secondary trend. But you have to be just have it in the back of your mind that the primary trend is pointing down. And then you got into this region here. That's the major break of structure there. Then we broke it, as we can see. We closed below it, which is always nice to see. Then we think, okay, great. All of this then was just that tertiary sort of moves. Just the pullbacks within the sort of moves. That was then the clear break. We then wait for it to push into some regions. So notice how there's always pullbacks. So if you ever miss a trade, like for example here, if you miss this area here, that's fine, you can get into a pullback. Notice how there's a miniature pullback in there. We then broke, we drove from October all the way down to December, so a long time for most people. And then we understand that at some point there's going to be a pullback. So what do you think all this is? If you were intraday, this would be beautiful because you would have been able to get into all of these sort of miniature swings here, in miniature ones there, miniature ones there, miniature ones there. But we understand at some point, because we've seen a switch in fundamentals, we want to be short this now. So then we have this move here, order block there. We have another order block up here. This is why it's important just to monitor the sort of all order blocks, if you will. Pushed into this, so let's say you miss that. Well, there's obviously always going to be a pullback, right? I don't know if we'll be able to get back. Oh, we can. Well, we had some breaker structure here with some more structure broken here, down here. But the main one really was, up there, drive, up there, broke it there. We then pulled back into a region, and then we sold off. So then what you do is you just go to the higher time frame again and think, okay, well, if you look at it from a technical stance, well, technically it's just following suit of that primary trend again. Obviously if you look on the weekly time frame, it's trending down. All of this move high was just the pullback, the secondary pullback for that high time frame trend. So now technically this is just the new leg for that primary trend again. But then you would know if it's going to switch like this and then switch to the upside because of the fundamentals that you would be following. And then you think, okay, well, where's the sort of next areas of interest? Well, we've got weekly lows down there. We've got some more lows down there, some more lows down there. Fundamentals seem, correct. We have another daily order block there. Then we can get into that. I mean, if you want to take profits, it's up to you how you want to do it. And then we drove, as we know with GU anyway, we did drive a lot lower than, than what was most expected, right? But of course, that was because of that trustonomics sort of issue that we had. So as we can see, it drove lower. So if we just wait for it, and as we know, at this stage here, the UK, or the pound anyway, did push all the way down into that 103, 105 region. So technically then, if you want to look at it from another technical stance, what do you think this is? Well, the primary trend load down here. So if I just move this, technically the primary trend load all the way down there. So what do you deem this then as? That's secondary trend, right? Because this is just a pullback within that primary trend that drove it all the way back there. So now this is just the secondary trend. So where are we now in terms of the overall trend? Like we know, this is just that secondary trend. Can we go higher than these highs again? I mean, it completely can happen. Depends on if that fundamental data and reasoning suggests it can. So as of right now, so if I just remove this, as of right now, we are just pushing basically higher in the secondary sort of trend there. Are we going to be fundamentally short again? Like I said, maybe if we push into some key levels up here, maybe. It just depends on that sort of fundamental reasoning. But like we know, right now, we are in that secondary trend technically. This is all the tertiary trends could have got into. Sort of miniature moves to the upside. Miniature moves, for the intraday traders, that is perfect. But technically, it's just that secondary trend that we're in. So now we've broken to the high. Of course, this is real time now. We've broken to the high, go to the 12 hours. Then you think, okay, well, now all of this move lower is just tertiary. Because eventually it's going to hit a reasoning. Let's say this one down here, for example, that order block there. It's tertiary, 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 tertiary. Eventually then it's just going to continue that secondary. And then of course, you have all your fundamental reasonings as to how high this can go, how far, etc. But that is all up to you for doing the work behind it. But this just helps you just to gauge where you are in regards to the trend and in regards to how long you can swing it. Because of course, it is always important to look at your fundamental reasoning as well. But hopefully that made a little bit more sense. You know, can we drive the higher? I mean, as we know, that could definitely happen. Then technically here, it would have broken the primary trend move, right? But where there has to be a reasoning as to if and why it breaks above that. But like we know, yeah, we just follow suit with the main sort of trades that most people would be looking at is the sort of secondaries, because as we know, that's more up to regions. But then if you want to look at the primary trend, then you use that sort of gauge as where price could pull towards, like a magnet. So then like a magnet sort of move would have been here, like that 125 level. So we can see here there's an order block there. There's also a key quarter level number there as well, which is that 125. Who knows, that could be just the driver for the next leg to the downturn, but at the moment we know that to not be the case. We can just drive a little bit higher. So where's our next region? We have another one up here at that 130s. We have a load of imbalance there on the monthly. All of this imbalance there, 128, 129-ish. And then could we drive lower again? Just depends where we are in the fundamental cycle at that stage there. But hopefully that made a bit more sense, and I will see you in the next video. Take care.